In this video, we'll take a look at gold, silver, GBP-USD, and DXY. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. So starting with the gold chart on the 1 hour time frame, as I said last week, we've been in this massive ascending channel where price has been creating higher highs and higher lows, right? And I talked about the possibility of price breaking out from this trend line. So we had a good breakout, and I think when market opened on Monday last week, we didn't get the opportunity. That's for those who weren't in on the trade. You didn't have the opportunity to go long because market opened with a gap, right? So we had a massive move to the upside. Now we've had a consolidation, right? Also remember, I told you there's a good chance we get to the higher bounds of the channel and then possibly a reversal to the downside before we go back up. So right now, this consolidation is kind of indecisive, and if you're not, if you're following gold, and I think the best thing to watch out for right now is either a bullish breakout from this ascent triangle or a bearish breakout from the support level, right? Which will see price coming back down probably to the bottom of this channel before we find the lows to keep going higher, right? So either case is possible, so that's why we'll be looking at both a bullish case scenario and a bearish case scenario for gold. So going down to the zooming in, so we can focus on what's happening over here, right? So zooming in, we had a flash crash on Friday, I think that Friday or Thursday, the case may be, where we had this massive wick to the downside but failed to close below this area of support, right? So for now, if you're going to go long, the best case to go long right now will be waiting for price to hit the higher bounds of the ascending triangle, consolidate, descending triangle, consolidate, and give us a clean breakout, right? When we get a clean breakout, this should be our confirmation that price is likely going to go higher. A breakout from this sloping trend line right now will give you an entry around these price levels. Stop loss can be placed underneath the consolidation list of breakout, or you could, place a stop loss underneath this area of support, right? I'll give you a wider stop loss, but if you are trading with good risk management and you have a good balance, then that's not a problem at all. But you could adjust your stop loss slightly higher, just below the consolidation list of breakout, and ride the position to go higher. So first target should be obviously at the higher bounds of the symmetrical triangle, where we could possibly see a rejection, right? We could see a rejection back down before we go higher, or we could blast straight through higher, and that would invalidate this channel we have currently on this chart, right? So that's the bullish case scenario for me on gold, and that's all I'll be watching out for myself, right? Because going short on gold is a bit tricky, and if you're not careful, you could get blown out. So something similar to what happened here, right? So if you went short here thinking we're going to go lower to probably fill this gap, I know most broker would have had gaps on their chart, right? So if you felt this breakout would have led to a fill of this gap, or probably to a fill of this gap, then you would have probably been wiped out of your positions. So that's why going short in a bullish trend is usually not advisable, right? Except you are trading a very tight risk to reward ratio, or tight stop loss, and you are willing to take those risks. So for a bearish case scenario, in my opinion, still the same thing. You have to wait, consolidation around here, and possibly a breakout, right? But this time at least wait for a proper candle close below this area of support, then before you go short. So target could be the close of the first candle, and if gold price fails to hold these levels, then we could see more move or more decline to the downside, closing this other gap. So this is a very, very likely scenario on gold, right? So remember, we have a gap over here and we have another one over here. So if we lose this area of support, there's a good chance we fill up this gap, price coming all the way down, and we also fill up this gap, right? I don't see any reason why we fill this one and somehow price is strong enough to go back up without coming to fill this one. So those are just the dangers of going long right now. These gaps tend to get filled over time, right? But there's no telling how soon they get filled, but just know that they do tend to get filled, right? If you also pull up this trend line like this, so within the symmetrical triangle, it already feels or seems like we've had a good breakout, right? So if you do this, so just another angle to watch out for to solidify your bearish case scenario, right? So if you do this, right, you'll notice that we had a slight breakthrough on this trend line. Now we have this massive candlestick, right? So what's holding us or holding price from going lower is this area of support. So if we lose this area of support, similar to what I explained before, then we can see price go down. So this would validate the breakout, so this red candlestick or break from this trend line, right? Because if you take a look, every time we break through the trend line within the symmetrical triangle, excuse me. So within the symmetrical triangle, we tend to see price fall a bit lower, right? So take for example this one over here, right? So we had a good breakout, a good support here that held, but when we took out the support level, you can see the flash crash to the downside. And over here as well, if you take a look at what we had over here, right, over here like this, we had a flash crash, pull back to the upside and dump. So similar thing is happening here again, breakout, dump. So you can see over here now we've got this candle breakout consolidation. We're probably going to go lower, right? So if you're thinking of going short, this could be an opportunity to go short where a good candle close below this area of support will be your entry. Stop loss can be as high as this highs if we get a reversal from here, or this one over here if you have wide enough good enough risk management and enough balance to hold this trade. But for me, I wouldn't be going short with this wide of a stop loss, right? So if we get a candle close below this area of support, stop loss could easily be placed around this price levels, maybe 200, 300 pips as case maybe. Then take profit target could be as low as the lower bounds of the ascending channel. So that's how I'm going to go short on gold. But mind you, trend is still bullish, so going short right now is a bit risky because there's bullish momentum with the trend. That's the only risk to going short, right? But the risk to going long is that we have gaps here that could come back down to get filled. So that's just the dilemma right now we face on gold. And gold is in the trending around the higher bounds of the the ascending channel, right? So which could mean a possible area of rejection, right? Lower bounds, then go higher. Price moves in waves. So if you've taken my course, you should understand what I'm talking about, right? I talk deeply about how price moves, the psychology of the market. So my students understand exactly what I'm talking about right now. So something else to watch out for, right? So if you, as far as chart pattern goes, this pattern right now over here seems like a descending triangle, solid base, lower highs, BS mounting pressure, but this will invalidate if we get a big bullish breakout to the upside, right? So on the other hand, this also looks like a head and shoulder, right? So head, right shoulder, left shoulder. It's not very clean. It's not very clean, excuse me. But if we do get a break from this neckline, then this would validate a reversal to the downside, followed by maybe a pullback up or a bearish continuation. So these are things to watch out for if you intend to trade gold this week. For me, I'm going to be very, very careful trading gold this week because there's just so many things that could go wrong. Price could go in either direction right now because the price action supports a move to either direction. Though the trend is bullish, so the bullish bias may, become stronger as the week unfolds. But like I said, we have gaps here that could turn out to get filled, coupled with the fact that we're still trading between this ascending channel, which could mean price reversal to this lower bounds of the channel before we go up. So anything could happen. So what I suggest is extreme caution, extreme patience. Watch out for clean breakouts and confirmations before you go long, right, or short as the case may be. That's it briefly for gold. Moving on, silver. So on the silver chart, we'll be taking a look at what we have over here, right? So if you look at the structure, still bullish. My chart looks a bit messy, right? But chart looks bullish. So nice breakout from this area of value, climbing up like a step case, and now we've had a breakout from this area of resistance as well. So this consolidation means two things, right? So there's likely going to be, So there's likely going to be a consolidation, so move up to the upside, move like this, followed by a good breakout in continuation of the bullish trend, which is extremely bullish right now on silver. So this is another reason why I'm still bullish on gold, right? Because if silver goes higher, I expect gold to go higher as well. But may not go as high as silver does, or may not put in as more violent move to the upside as silver does, because right now silver is clearly trading on all-time highs, good as well, but silver's chart seems to look more structural compared to what we have on gold, right? So bullish case scenario for me on silver would be exactly this, waiting for more consolidation. So waiting for more consolidation, good breakout, and just going to draw this again. So more consolidation like this, right? then a proper breakout. So something like this will give me a confirmation to go long. My entry is going to be placed here. Stop loss is going to be underneath the concentration risk to the breakout to give me a tighter risk to reward ratio. Then I'm going to trade my positions to go higher because it's going to be in price discovery. So I'm going to be aiming for at least 500 to 1,000 pips on this one, because I do think silver is likely going straight to $100 this week or next week, as the case may be, right? So if you take this, a major price movement will give you around 1,000 pips, as the case may be, just like I said, right? So this is what I'm watching out for on silver. So this week I'm going to be focusing more on silver than gold, because the silver chart seems to look more clearer, right, compared to the gold chart. Mind you, for a short case scenario, even if we see some sort of flash crash on gold going to the downside, we may not experience similar harsh movement on silver. So that big movement we may see on gold may just bring silver back down to retesting this area of resistance, which is likely going to turn into support. Then we see a move to the upside, right? So this is something I'm also watching out for. So if we get a move, a break from this area of support, then I'm going to be watching this area of resistance, probably going to turn into support for a bounce to the upside. If this happens, I'm going to try to catch the bounce after a confirmation of a rejection from this area of resistance, probably going to turn into a support. Stop loss is going to be placed underneath that bounce, and I'm going to trade my positions to go higher till we get $100 for the silver price, right? So this is briefly for my bullish case scenario and the bearish case scenario for silver. And mind you, something to note is that we also have a gap on silver over here, right? So there's a small gap on silver over here that hasn't gotten filled. So that's something that's still likely going to happen. So something to pay attention to, right? But if we get a bullish case scenario first, so I'm going to get rid of this, for example. So a minute. So if we get something like this first, so we get a move to the upside, consolidation within these price levels, and then we get this bullish breakout, then you wouldn't have to worry about this gap filling up, right? Because this gap could fill up in the next 6 months. It could take a year to fill up. It doesn't have to happen right now. So if this happens, we get a good breakout to the upside, then I'm going to go on with my long positions without any scare or fear of having a reversal to fill this gap, right? You can see this gap happened on 11th. Today is what? Currently 16th. So it doesn't have to get filled immediately. It could go all the way up to $100, then come fill it 2 months later or 6 months later, right? So that's also something to understand about gap. So that's it briefly for silver. If you have questions, leave the questions in the comment section down below. And lastly, the major charts for today will be GBP-USD. So we talked about this last week, and I think the DXY has been a major mover across major currency pairs. And if GBP-USD decides to go lower, right? If GBP-USD decides to go lower, this could be because of a strengthening in the DXY, which we're going to take a look in a minute. So last week we talked about the possibility of a retest, a move to the downside. But I was skeptical. I'm still skeptical about this, excuse me, because if you take a look at what we have over here, there's a good chance we get a move into this area of value, then a bounce to the upside, blah blah blah. I don't trade currency pairs. I hate to trade currency pairs because there are just too many noise, right? So I focus on gold and silver. They do really well for me, so I don't have to struggle with currency pairs, right? So for now, the best currency pairs to trade right now are the JPY pairs. So USD JPY, GB JPY, Euro JPY, CHF JPY, because the Japanese yen has been getting weaker, and that seems to hold more momentum over the other currencies they're paired with. So that's why I focus more on JPY pairs. If I get a good opportunity, I could maybe take 1 or 2. But for others, both major, minor, exotic, I just try to stay away, right? But for now, for those who trade GBP-USD, this is a 4-hour chart, and right now, honestly, I can't even give you a precise price level to go short or to go long, except you want to gamble, right? So for me, the reason I'm taking a look at this chart is because I just want you to be very careful if you are trading GBP-USD right now. Ideally, with the current chart we have on screen, ideally this could be an opportunity to go short, right? Ideally, based on the price action I'm seeing right now, because you can't call this a trending market, you can't call this a bearish or a bullish trend. This is just a range, a big range, right? A big consolidation. So the main trend ended at these highs, right? The main trend ended at these highs when we had price creating higher highs and higher lows. This was around July of 2025, right? Yeah, July of 2025. So July last year. So since then, we've just been consolidating. So this has been a big consolidation, if not slightly a bearish trend, because you can see lower highs, right? So swing high, lower high, lower high. You can see lower lows, right? So this looks more like a bearish trend from here. Looks like a consolidation with relation to this bullish move. So it's just crazy because there's a good chance we go lower, right, all the way down here, then go higher. There's a good chance we also go straight up from here, right? So it's just crazy. So for me, I don't gamble with stuff like this. I just stay away and focus on trading markets with clearer price action and clearer charts. But ideally, this should be an opportunity to go short, aiming for at least this area of value. And if you want to do that, you could go short when the market opens. So this is a 4 hours chart. So I'm going down to the 2 hours chart, for example, and you can see we had a very good volume breakout from this area of support. We had a very good retest now, reversal to the downside. So if you're going to go short, you could go short when the market opens. In my opinion, stop loss can be placed above these highs. Take profit target could be as low as this area of value over here, or this support, right? It could even get reversed at this support. So stuff to watch out for if you are trading GBP-USD. I think similar chart appears on EUR-USD as well. So for me, I wouldn't be trading GBP-USD. I don't trade currency pairs that much, but if you are, you have to be very, very careful and be ready to accept your losses if those happen. So lastly, we're talking about the DXY. So DXY is something that's also making me skeptical about the gold. I'm going to share one more vital information if you're trading gold and silver, right? So for now, if the DXY continues to go stronger, right, so this week it gets stronger, coming to area of resistance, consolidate, then breakouts, for example. So this could be a problem for gold and silver, right? We could quickly just easily see gold. So you're going back to the gold charts, you see gold snapping towards the downside. You could see silver violating its current structure and just going down if the DXY seems to gain momentum and strength this coming week, right? Very good possibility. And mind you, something else to pay attention to is the geopolitical tension right now between the US, Europe, and Greenland. You see, United States trying to seize Greenland or trying to claim Greenland for themselves, and that has been creating some sort of geopolitical tension if you follow up the news, right? So that's also something that could potentially send the price of gold and silver higher, right, regardless of what the DXY does. So just a few things to pay attention to this week. That's it from me, guys, this week. If you love the content, please like, subscribe, leave a touch in the comment section down below. If you have questions, leave them in the comment section down below. That's it from me, guys, this week. See you next week.